Hello, Bold Profits Nation, and welcome to the October month-end edition of Amber's Macro Monday right here on the Paul Mampilly YouTube channel. I'm Amber Lancaster, and as I mentioned last month, this monthly video is a series that aims to cover the most captivating and the most thought-provoking economic charts that crossed my radar over the last few weeks. So over the next few minutes, we're going to look at what I like to call the Fabulous Five. The Fabulous Five are the five most fascinating charts that I've seen this month. And with these charts, I'm going to review what makes them so interesting and how they interact with the US economy. So let's get started. So this is Fabulous Five chart number 1. This chart shows you how US consumers are ready to spend. This is a chart of Bloomberg's most recent Consumer Comfort Index. This index measures US consumer sentiment, buying conditions, and apparently, per its most recent reading, there's never been a better time to spend. As the green arrow and circle on the right shows, the index is now sitting at 58.5, an all-time high. And per Bloomberg, this purchasing climate index shows how, quote, a strong labor market, income growth, and low inflation will help keep consumers spending and could provide comfort to retailers ahead of the holiday shopping season, end quote. And complementing the Consumer Comfort Index, Fabulous Five chart number 2 is all about putting any US retail company's holiday sales anxiousness at ease. According to the survey from the National Retail Federation, NRF, and Prosper Insights and Analytics, Americans are planning to shell out more money this holiday season. This is a welcome forecast because, as Bloomberg notes, the U.S. Thanksgiving holiday falls on November 28th this year, which means there are only 26 shopping days between then and Christmas, compared to 32 days last year. And reporting that retail companies are panicking and forewarning investors that sales could be down this year due to the shortened number of shopping days. But this forecast chart proves otherwise. In all, the NRF survey shows that consumers say they will spend an average of $1,047 this holiday season, up 4% from $1,007 last year. NRF President and CEO Matthew Shea states, quote, consumers are in good financial shape and willing to spend a little more on gifts for the special people in their lives this holiday season. Retailers are fully prepared to meet the needs of holiday shoppers looking for that perfect mix of sales, quality, and selection, end quote. Fabulous Five chart number 3, last Wednesday, Tesla's stock price shot higher, zooming past $300 per share and shocking most people, but not us at Bold Profits. This is after the electric car maker posted its first profit in nearly a year. Per Bloomberg, the company earned $1.86 a share in the third quarter, beating analysts' average estimate of a 24-cent loss, a true stunner for the markets. The stock is up 30% from its low on October 23rd to its close on October 25th. Fabulous Five chart number 4 is from the U.S. Department of Energy, and it's all about how Appalachia has emerged as America's biggest shale gas producer, and it's growing. As this chart shows, total gas production has now reached a record 33 billion cubic feet per day. This boom is creating a glut of gas called ethane, an ingredient used in petrochemical and plastics. So according to State Impact Pennsylvania, there's so much leftover ethane that Royal Dutch Shell Oil Company is building a $6 billion chemical plant to, quote, convert some of Pennsylvania's ethane into plastics, end quote. But this is not enough to handle the surplus. So companies are, quote, shipping American ethane all over the world, fueling a global boom in plastics that is expected to accelerate in the decades to come, end quote. Fab 5 chart number 5, the cost of renewable energy is falling across the board. As this chart from Bloomberg NEF, aka BNEF, shows, the quote, 2010s have seen prices fall by more than half for all major renewable energy sources, onshore wind, offshore wind, and utility scale solar, as well as batteries used to store power, end quote. In all, their analysis shows they anticipate continued cost declines in renewable energies, especially in the 4-hour battery packs. And as you can see by the purple line, battery storage has seen a precipitous drop from nearly $800 per megawatt hour in 2013 to less than $200 per megawatt hour today. BNEF predicts that 4-hour batteries will become, quote, competitive with other sources designed to meet demand peaks, such as gas reciprocating engines and pumped hydro, end quote. So this news comes on the heels of Tesla's announcement that they're seeing more demand for solar and batteries in recent weeks. And as you may know or recall, one of Paul Mampilly's most recent forecasts, as seen in his September 24th, 2019 Bold Profits Daily article, how it focuses on batteries and how they're prime, ripe, and ready to soar higher on the new energy revolution. So that concludes this month's edition of Amber's Macro Monday. If you like to follow me on Twitter, I can be found at Lancaster Guru. I aim to post interesting factoids and economic stats that catch my eye throughout the month, so you may see my posts there. Thank you so much for watching. I appreciate you so much, and until next time, take care.